In this week's episode of the Stock Scores Market Minutes, I'll talk about how you can make a lot of money by recognizing when the market is surprised. I will then do my regular weekly market analysis and we'll look at the trade of the week on AVH. All right, so let's talk about trading surprises. The best and most profitable trades will come when something happens that the market doesn't expect. When the market anticipates something, it often begins to price in that something before it actually happens. And therefore, when the news actually comes out, it's already largely priced in. So for example, if a company might have a new drug that is being developed, if the market moves up for a few weeks in anticipation of the news that that drug has been approved, yes, it'll go up on the news, but it won't go up as much as if that had been a total surprise. Well, the very best trades happen when the market doesn't expect anything. When you have a stock that's trading very boring, very quiet, and then some new information, be it a rumor, a news release, hits the market and excites investors, and all of a sudden that stock will move very quickly. These trades are often signaled by a burst of abnormal activity from this low price volatility. Now, what's important is that you have the right tools to find them before the crowd gets on them. And that's really what the challenge is. It's not hard to see it when a stock comes alive with abnormal activity, but what's hard is to pick that stock out of the thousands that trade every day to find it in a timely fashion. Now, I watch the market all day with some of my tools where I'm using computer algorithms to look for that abnormality. And most of the day is spent waiting, but that waiting game is worth the reward because every day there are a few stocks that come alive and surprise the market. So here's an example. This is a stock that came up last week, and I've actually been watching this stock for a little while. It's been surprising the market on and off for the last little while, but notice on the 23rd of May, the stock was very boring for most of the day, up until just after 1:30. And then it came alive right there. And you can see there's a little pink dot there. That's the Stock Scores action candle. And it's designed to find those things. And so the algorithms that I have, the processes that I run constantly, they're all automated. They're looking for stocks that do this. And on Friday, there was probably 5 to 10 stocks that behaved abnormally out of nothing. And MAXR was one of them. And you look what happened. This is a 2-minute chart. Within that 2-minute interval, it jumped quite significantly. Over the following half an hour, it really moved, moving up from $7.25 to $9. That's the kind of trade I want to find. And without my tools to capture them, I would never be able to find those surprises. All right, let's get into this week's market analysis, starting off, as always, with the US markets. So it's been a bit of a sell-off market the last few weeks, but not an aggressive one. And I think a lot of us sort of thinking maybe the market's going to make this sharp correction, and it really has been an orderly slide to the downside. Now, yes, we've had a fair bit of volatility, a number of 300-400 day swings, 300 to 400 point swings in a day, but without really big moves. In other words, when there's weakness, the buyers step in, and when there's a little bit of strength, the sellers step in. It's been fairly orderly. So let's take a look at this chart. This is the downward trend line as we have it now, and then we have support right here. We're holding above that support so far, but we have falling tops on the chart, and that signals to us that there is pessimism in the market. Why do we say that? Well, every time the buyers are strong and can push price up, they hit a high that is then higher than the next time. So here we have buyers pushing it up, but it is higher, or pardon me, lower than the previous time. And then here again, late last week, yes, the stock moved up a little bit, or pardon me, the market moved up a little bit, but it didn't hit a higher high. In fact, all we have here is falling tops on the chart, and that is a sign of pessimism. If we break down through the 280 level on the SPY, I think we could get a little bit more aggressive selling. For now, it's been fairly orderly, but that's something we want to watch for. If we can break this downward trend line, busting through the roughly 285 level, then the buyers are getting more aggressive and we may reverse the profit taking that we've seen the last few weeks. Now, that profit taking is very reasonable and expected because we've had a market move straight up since the end of December. It rallied into resistance and it gets stuck. That's a very normal thing to have happen. What I want everyone to notice is that although we've had selling pressure the last 3 weeks, it hasn't been like this selling pressure that we had back in January, February. That was aggressive. That was really pushing the market lower in 2018. And then at the end of the year last year, again, very aggressive selling pressure, big moves for the week. That showed that the sellers were really motivated. We haven't got that yet. Doesn't mean we can't get it, but so far it's just kind of a lack of buying interest as opposed to really strong selling pressure. Moving along to the Russell 2000, which is the US small caps, they continue to drift lower, and therefore I think you got to be fairly cautious with this market. It is at support, and so we should bounce, but let's wait until we do bounce before we get too optimistic. I'd like to see it break up through this little short-term downward trend line as a cue that it's going to move back up toward the highs. If instead it breaks down through this support, then I want you to get pretty pessimistic with the small cap US stocks. Moving along to the Canadian markets, TSX 60, similar situation. It's got those falling tops. We had some pretty substantial selling pressure because of oil, and that took us down towards support. We've got the falling tops, and therefore this is a short-term pessimistic market. It's again not really dramatically a seller's market. It has had one really big down day when oil really had a rough day, and of course the Canadian market dependent heavily on oil, and it shows up there. But until we break down through this support zone, I wouldn't get too worried, and I'll get optimistic when we can break that downward trend line. On to the longer term chart, and again we had a market that rallied, actually broke through resistance. It's pulled back. It's very normal for a market to go sideways here after making those huge gains over the last 6 months. We're destined to build a base, and that's okay. If we start to get really aggressive selling like we had here or like we had here, then we'll take a different stance. But for now, I think this is just a market that has lost its buyer enthusiasm, not one where the sellers are particularly strong yet. On to the TSX Venture, where you can see we've got those falling tops, and therefore the sellers are in control. It's pessimistic. We've got pretty good support right there. If we break down through support, we're going to have to get more pessimistic. And if we can break this downward trend line to the upside, then we'll probably head back to those local highs from March. But doesn't look like a great market right now. Individual stocks could do well because they're not correlated to the index, but in general, the TSX Venture is fairly weak. On to currencies, US dollar has been strong for some time, but last week it actually hit a new high and then closed below its open. Not a big deal if you're a bull. The bullish trend is still intact. However, you may see a little bit of sideways trading in the US dollar near term. Canadian dollar continues to struggle. You can see that we're in that downward trend line, and until we can break the downward trend, you want to be a bear on the Canadian dollar. On to interest rates. Of course, if this goes up, interest rates go down. We had a good rally last week in the US bond market. That is taking the bond market up to that area of resistance. We had this triple top back here. We're getting close to that now, and therefore I expect the short-term upside is somewhat limited for the bond market, which means short-term interest rates are somewhat limited to the downside. That doesn't mean that 6 months from now we couldn't be moving up toward this level, but I think near term we probably hit this resistance and then go sideways for a little while, giving interest rate lowering a little bit of a break. And next up, commodities. Of course, gold has been in a bit of a bearish pattern for the last little while, but that is something called a falling wedge. And although we've seen this selling pressure the last 3 or 4 months, it could resolve with a breakout through the top of the wedge, which would take prices up here. I think that'll happen if the market corrects further. It's sort of a safety bet. If the market starts to correct, you're going to see some money look for safety in gold, and that would be the reason to break to the upside. If the market remains stable, I think gold will continue to drift. And so we'll just keep an eye on where it is relative to this pattern. For now, it's stable, but I would say pessimistic, and so generally speaking, you want to avoid gold right now. Oil market has broken its upward trend line from a falling top. So here was the upward trend line, and we were kind of dancing around the upward trend line. We built a falling top 2 weeks ago, and we broke down with that sharp move to the downside last week, and I think that means that oil goes lower at a minimum and sideways at best. I don't see tremendous upside for the oil market right now, and I actually think we could move down into this level next, and therefore I think you want to be pretty cautious and selective with energy names. Finally, the fear chart. Of course, fear is determined by the volatility of the implied volatility of the S&P 500 options, which is what the VXX is all about. And it had a little bit of a jump, and then we've slowly been moving lower. We're still elevated. We're still off of the lows, And so there's still some concern about the market, but you get this sense that maybe investors aren't so worried about a big panic sell-off right now, and therefore this is a bit of a bullish signal, but we have to keep a close eye on it. So my ratings then, neutral long-term on US stocks, bearish short-term. Same for Canadian stocks. We need to see a break out of those patterns as they pull back. Gold, neutral on both time frames. We are seeing some stability in gold, but it hasn't started to be a market where we see strong buyer enthusiasm. And then bearish on both time frames for oil. That's a big reversal from just a few weeks ago as the upward trend has been broken now. Pessimism is slowly building, but the sellers are still not desperate, and that makes the selling relatively orderly. We want to watch for a breakdown through the 280s level of support on the SPY for the next wave of selling. If that happens, get a little more aggressive on the sell side. Oil's trend has turned lower. Gold stabilizes as a hedge against market weakness, but still not showing buyer enthusiasm. And fear remains relatively low, but somewhat elevated from normal. So let's look at the trade of the week now. This is a stock that I found using that concept of surprise last week. You can see that the market was very quiet. This is a 2-minute chart and for a day trade, and it came alive right here. That's your abnormal behavior, signaling to you that it had something going on. Now, if you're having tools that can find these in a timely fashion, great. But if you find it half an hour later, it's already up there. If you find it even 4 minutes later, it's already made a significant jump. So it's often really helpful to be able to find these in a timely way. Now, from the economic standpoint of this trade, if you're using a $100 risk tolerance, it would require a position of 760 shares, which is $2,432 of capital, but you can margin this 3-to-1 because it is over $3, and therefore the actual capital outlay is only $835. By the end of the day, the trade had made 5.85 RR, which is a $585 gain on the $835 that it took to take the trade. And that is a 70% return for really a one-day hold. In fact, less than a one-day hold because the entry was around 11 o'clock in the morning. And that's a great day trade, one that isn't too capital intensive, all based on the idea of surprise. Well, that has been the Stock Scorers Market Minutes for May 27th, 2019. I hope that you've enjoyed it. If so, please click on the like button, leave a comment, subscribe to the channel. Most importantly, trade well.